Music fades in, then out. Hello, and welcome back to the channel where we dive deep into the fascinating world of hard-to-borrow stocks and potential short squeeze setups. Today, we're putting a unique spotlight on a name that's been lighting up our screeners, Global Interactive Technologies Inc., trading under the ticker GITS. This isn't just any stock, it's presenting some truly remarkable numbers that demand our attention and a thorough educational breakdown. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. GITS ticker and chart. Global Interactive Technologies Inc., or GITS, operates in the communication services sector, specifically within internet content and information. Headquartered in South Korea, the company, through its subsidiary, focuses on technology-focused platforms. Their key offering is Filings, a digital fan engagement platform designed to support online fan communities, content discovery, sharing, and user interaction. This is a micro-cap company with a market capitalization currently standing at just $10 million. Highlight price action. In terms of recent price action, GITS has been incredibly active. Today alone, the stock is up a staggering plus 26.64%. Looking back, it's gained plus 28.44% over the last 5 days and a solid plus 22.62% over the last 30 days. This recent move has been accompanied by significant volume. Today, GITS traded 586,100 shares, which is an astounding 11.0 times its 30-day average volume of 53,166 shares. Clearly, something is stirring with GITS. What is cost to borrow and why it matters? So, what does it mean for a stock like GITS to be hard to borrow, and why should you care? When someone wants to short a stock, they first have to borrow shares from another investor, then sell them, hoping to buy them back later at a lower price for a profit. For the privilege of borrowing those shares, they pay a fee. This is the cost to borrow, or CTB. This fee is typically expressed as an annualized percentage. Think of it like an interest rate on a loan. Geographic CTB explained. Why does it matter? A high cost to borrow indicates strong demand from short sellers to borrow those shares, and a limited supply of shares available to lend. When a CTB fee gets exceptionally high, often exceeding 100% annually, it signals a significant squeeze on the supply side and a potentially uncomfortable situation for those who are short. Why the stock is hard to borrow right now. GITS CTB number, 937.9%. This brings us back to Global Interactive Technologies Inc., our hard-to-borrow screener flat GITS with an astounding 937.9% annualized cost to borrow fee. Let that sink in for a moment. To put it simply, if a short seller borrowed GITS shares for an entire year, they pay nearly 10 times the value of those shares just in borrowing fees. This is an incredibly high number, indicating extreme demand to short, or more likely, an extremely tight supply of shares to borrow. The estimated float for GITS is relatively small at 2.4 million shares. While the exact number of shares currently available to borrow is unknown, a CTB fee like this strongly suggests that the supply is severely constrained. Our internal composite squeeze score, which factors in CTB levels, borrower supply, float size, and momentum, currently places GITS at 42.6 out of 100, highlighting its elevated short interest characteristics. Squeeze mechanics explained. So, how can a high cost to borrow potentially lead to a short squeeze? It's a chain reaction. Short sellers borrow shares and sell them. If the stock price unexpectedly rises, they start losing money. These losses can escalate quickly, especially if the borrowing fees like the 937.9% for GITS are also eating into their capital. Geographic squeeze mechanism. When their losses become too great, or if their broker issues a margin call, short sellers are forced to cover their positions. To cover it, they must buy back the shares they initially sold. This forced buying creates additional demand for the stock, driving the price even higher. This upward pressure can then trigger more short sellers to cover, creating a positive feedback loop, a short squeeze that can send the stock parabolic in a short period. The shrinking supply of available shares to borrow, combined with high fees, makes the situation even more precarious for short sellers. Dilution risk check. An important factor to consider when evaluating a potential squeeze candidate is dilution risk. Dilution occurs when a company issues new shares, which increases the total number of outstanding shares and can reduce the value of existing shares. Even with a high cost to borrow, significant dilution can completely negate a short squeeze thesis by providing an abundant supply of new shares to short sellers or simply by driving the price down. Highlight GITS dilution check. In the case of Global Interactive Technologies Inc., our checks found good news on this front. No recent dilutive SEC filings such as -1, -3, or 424B were found in the last 90 days. Furthermore, we found no recent reverse split for GITS in our look-back window, which can sometimes be a precursor to further capital raises or negative sentiment. This clean slate regarding dilution makes the high cost to borrow for GITS even more intriguing. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For a stock like GITS with its current setup, here's what astute traders might be watching. Continued high cost to borrow fees are crucial. Any increase in CTB momentum or further reduction in available shares to borrow would amplify the squeeze potential. Keep an eye on the volume. The recent 11x average volume is significant, but sustained or increasing relative volume on up moves would be bullish. Price momentum, especially breaking through key technical resistance levels, could also be a catalyst. Joe GITS chart again, zoom in on recent price. However, it's vital to remember that a high cost to borrow does not guarantee a short squeeze. Sometimes, short sellers have very strong conviction that a company's fundamentals will eventually lead its stock price much lower, and they are willing to pay exorbitant fees to maintain their short position. This is the tricky balance of evaluating these setups. Global Interactive Technologies Inc. GITS presents a fascinating case study in the world of hard-to-borrow stocks. With an eye-popping 937.9% annualized cost-to-borrow fee, a relatively small float of 2.4 million shares, impressive recent price momentum, and no immediate dilution concerns, it's certainly on the radar for anyone interested in short squeeze dynamics. The company's focus on digital fan engagement in South Korea adds another layer to its story. Remember, navigating these high volatility situations requires thorough research and a solid understanding of the risks involved. We are simply breaking down the mechanics for educational purposes. If you found this deep dive into GITS valuable, please give this video a like, subscribe to the channel for more unique insights into how to borrow stocks, and let us know in the comments below what other tickers you'd like us to analyze next. Thanks for watching, and happy trading!